Hey, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx, coming to you from the live trading room downtown, Southwest Florida, Naples, where it's hot and humid outside today. We've got the AC cycling off and on, we've got the gardening guys outside making all kinds of noise. So I apologize if there's some background disturbance going on, but I'll try to be as clear as I can, stay as close to the mic as I can. So we're coming to you live, as I said, from the live trading room of drstoxx.com. That's drstoxx.com. And if you're interested in joining an amazing group of traders where we hang out all throughout the trading day, sharing trading ideas, and I tell you what I'm trading, I keep track of these as well. I'll give you a spreadsheet of all my open trades, entry price, stop price, target price, reasons for the trade, and adjustments made along the way. If you're interested in that, go to drstoxx.com, click on the subscribe button, scroll down to the live trading room. If you're interested specifically in options, you can go to the live options room. We just launched that a couple of weeks ago. And if you sign up for either one, you'll get to subscribe to the other at a deep discount. All right, enough about that. Let's drill down to some work. First of all, a quick look and a bit of a plug for a service that you might not be familiar with, and this is Black Box Stoxx. I've been a subscriber for several years. Somewhere in the recesses of my email, I've got a link that if you use it, you can get a free 1 week trial. See if I can dig that out. I'll put that in the live trading room for those that are interested. And you get all kinds of good stuff on here. But what I mainly use it for is to monitor call flow throughout the day, call and put flow throughout the day. You do get a list of alerts. So these are the most unusual sweeps and big blocks and rapid bullish, rapid bearish trades that are going on throughout the day. You can see the ticker symbol, the strike price, the expiration price, the time of the trade, the kind of trade it is, how much they paid, and where it's trading right now. It's a very good service for keeping track. When you start to see stocks that you don't normally see on the list, like you're going to see Tesla and Nvidia and Apple every single day, Microsoft and Google and all the rest. But when you start seeing stocks that you haven't seen for a while, they kind of show up like out of the blue, and you start to see a number of hits on those stocks. It's something worth paying attention to, particularly if there's not really much going on in the stock itself. Like, for example, EL right now today, it gave out some earnings, which were actually pretty good, but the market didn't like it, knocked it way down. So here are some dip buyers coming in. But if there's no earnings, there's no upgrade, there's nothing on the near term horizon, and you see a lot of unusual flow into a name, and you haven't really seen much of it before, there could be something going on in that stock. Might be worth paying attention to it. So that's one way you can do it. These are just the most unusual trades. If you click on the flow link, you'll get every major trade over $100,000 in size. That's my filter. You can go down to 50, you can go up to 500, whatever. And you're going to see how much money is going into all these different trades. When you, for example, let's just click on Tesla, right? How is the market treating Tesla today? Mostly bullish, mostly bearish. Where's the big size going? Where are all the big trades going? You can see it's a bit on the mixed side, right? We've got a string of calls, we've got a string of puts down here, and then it's kind of mixed in between. Here's some of the further. Yeah, it's pretty mixed, pretty mixed, pretty mixed. So anyway, that's the market today. All right, let's move on. And you also get a little nifty chart over here, and I like this little go and no go indicator. So if you toggle that on, it will give you a to stay out of this. It's a no go zone because it's in downtrending mode, or it's in choppy mode, or it's not really trending higher. And when you get a light green, when it shifts from red to light green, that's a thumbs up. That's a buy signal. You can see this kind of playing out here. Blue and green is a go zone, and that means bullish. All right. Enough of that. Let's just go over to some charts. So I told the group today that I wanted to focus on, let's get to the indexes here. I wanted to focus on talking a little bit about where you set your stop price and where you set your target price. because managing the trade, once you're in the trade, of course, finding the right thing to trade and getting in at the right time and determining whether it is a bullish chart, a bearish chart, or something in between, that's a big part of the task of trading. Once you're in the trade, however, you're not going to make money if you can't manage your trades well. And that is all about managing risk. It's not about managing the reward. The reward will take care of itself. You've got to manage the risk. As Warren Buffett likes to say, the rule number one of trading is don't lose money. Rule number two is don't forget rule number one. I love that. I use that all the time. All right, so let's talk a little bit about that. But I do first want to give you a synopsis or kind of what I'm seeing in the charts here for the major indexes. This is the S&P 500. You can see that let me block it off here, in this little period where it hit new all-time highs just a few days ago, and then it got slammed on DeepSeek, and then got slammed again yesterday over the weekend on tariff news. It's in a rather choppy place. You've got gaps, you've got craps, you've got gap and go, you've got gap and crap, you've got kind of everything in there, and it's sort of like up one day, down the next. So it's a fairly tight trading range, 610 to 592 or so. We are right in the middle of that range, which is not a bad place to be. And we came down off of the lows, and now we're moving higher. So near term, we've got a nice little trend going on. We are filling in the tariff gap. We had more tariff news out yesterday during the trading day, which knocked the price up because first Mexico and then Canada both decided to capitulate. I guess we could use that word, and appease some of the demands that were made on them to avoid tariffs for at least a month. China is now on the plate today. I don't know if we've heard yet. I've been kind of out of the loop for the last couple hours. I don't know if there's been any resolution or any progress on Trump's phone call with President Xi, which was supposed to happen sometime this afternoon. But the market's happy. It's up near the highs of the day. That's really all we need to know right now. So is this a bullish chart? Yes. So if you look at the angle of the linear regression channel, those are the salmon and blue zones in the back there. It is moving from lower left-hand corner to upper right-hand corner. Not quite a 45-degree angle, more like a 35-degree angle. But anytime you see that trending higher, it is a trend. It is an uptrend. We also have a sequence of higher lows. We're starting to see a sequence of lower highs, so that's a little bit of a concern. But typically what that means is consolidation. We're consolidating the moves. We're getting tighter and tighter and tighter, the trading range getting tighter and tighter. And the tighter the base, the bigger the breakout. So I think we're heading toward some good resolution higher. I came into quarter one at the end of December after a very good 2024, one of our best years of trading. 2021 was my personal best year of trading ever. And then 2022 was the bear market. We made money in the bear market, but not a whole lot. 2023 was kind of a transition year. And then 2024 was another beautiful year of big profits, really nice, consistent profits, fairly easy trading. My thesis for 2025 for the first quarter, likely into the second quarter, was that things would get a little more challenging, that there would be a lot of consolidation, and there would be a short term, at least for the quarter, more of a bearish trend in the market. We have not seen that develop just yet. We've had these big deep down dives, right? The DeepSeek dive and the tariff dive already late January, early February, but they're not following through. They're not seeing downside follow through. So that's actually very bullish. When you get some bad news, the market has to price it in right away. It usually overdoes it, especially to the downside. That's a huge point to remember, by the way. Fear is a lot stronger emotion than greed. In fact, St. Thomas Aquinas said that 800 years ago. Fear is stronger than greed. Fear drives the market down. Greed drives the market up. So that's why you tend to get really slow trending action to the upside, but very fast drops to the downside because fear. Fear is usually overdone. Greed, not so, but fear usually overdone. So if you're going to be any kind of a trader consistently one kind of trader and that's it. You should be a trader that buys the dips because you're more likely to be right than wrong because those dips tend to be overshot, overdone, overvalued. All right. So consolidation, bullish recovery from a couple of bearish drops. All that is good. Tight trading range. We're in the middle of the range, but trending higher. That's good. Now, let's just assume that we were, let's get all this stuff off of here. Let's assume that we bought the S&P 500. We bought some calls on SPY, or we bought SPXL, which is the 3x leveraged ETF for the S&P 500, or just shares of SPY. We have a long position in SPY. We want to know where to put our stop loss, so we can manage our risk. We don't take on any further risk. Well, there are several ways you can do it. Now, SPY is both above and below the 50-period moving average, so we can't really use that as a place to put risk. It's too close to current price right now. Price is just, it's a little bit below, it's a little bit above, it's too close. Your most appropriate place to put a stop loss is to go back a little bit in time and find the most recent pivot low. Pivot low. That's a place where price comes down to a place, it hits an equilibrium, hits a volume shelf, hits a level of valuation, and then bounces strongly back up, forming a little pivot. Let me get my brush out here. Your most recent pivot low is that one right there. There's another one back here, but that's quite a bit, that's, fair bit down there. We don't want to go with that one. That's too far away. That's too much risk. So your most natural place to put your stop loss would be, a dime or 15, 20 cents, 30 cents maybe underneath the low, not the open, but the low of that day, which would be around about 590. I would actually put mine at about 589. Give ourselves a little bit of downside cushion below that low in case the market makers push everything down to take out the stops that are just like a nickel away, right? Don't put it a nickel away. Put it a good 0.5% away from the pivot low. So that would be where I would put my stop loss. Now, the couple of other things you can do, you can put it below the linear regression channel, just below the lower edge of that. That's a 2.0 standard deviation. 95% of the time, price will be contained within that frame, right? Within, above the lower edge, that lower edge of the pink zone right there. So 95% of the time, you're not going to see the price of SPY trade down below that. So it's a pretty safe place, right? So if you're near the pink edge, you would put it underneath the pink zone, not too far below, but 30, 40 cents below, 0.5% below. And that actually coincides quite nicely with the recent pivot low that we just saw. All right, so that's talking about putting a stop loss there. Now, if you are trading above a major moving average, the 200 or the 50, some guys like to use the 100. I don't use it at all, but the 50 or the 200 are the two major moving averages, in my opinion. And you can use the 50-period moving average if you are looking at a longer, not so long, more of an intermediate term trade. And you can use the 200-period moving average as a place to put your stop loss just below it for a longer term trade. But again, we're too close to the 50 to use it, and we're too far away from the 200 to use it. So both of those aren't really applicable here. Now, let's say you've got your stop loss on, right? You're already in the trade. You kind of need to know, where should I get out? Well, there are several ways there are actually more rules for selling than there are for buying. A buy signal, I won't go over that today. We'll save that for another time. But the buy signal has to be very clear, and there's like 3 or 4 points that have to line up for you to get a buy signal. But the sell signal, there are various different kinds of ways of selling a stock. You sell it, of course, if it goes down and triggers your stop loss. You'll get out automatically, and then you move on. You take your loss and you move on. But what do you do with a successful trade that's actually moving in your favor? Well, of course, you do want to raise up your stop loss to reduce your risk, and then you can start protecting some of your profit. That's a very good thing to do. But what if it's really moving strong and you don't want to get you kind of want to maximize that movement and not get trapped above a certain level and then it crashes right back down the next day. You don't want to stay at the party too long, right? Well, very easy way of determining that is you look for a not a pivot low, but this time a pivot high. There are a couple of them here and they happen to all be at the same level, right? Here's a pivot high, here's the most recent pivot high, here's a prior pivot high, and they're all pretty much at that same level, 610. So 610 is going to be your obvious point where at least you want to take some profit off the table and then tighten up your stops. You can see the last time it got up here, last two times it got up here, it triggered bearish divergence, and that in turn precipitated a move down. Last time it was up here, it did not hit bearish divergence, and that's actually a bullish thing. So chances are pretty good because you don't have that bearish divergence on the last touch of that level, 610, that chances are pretty good that we're going to see a breakout to the upside to new all-time highs. That may take place in a week. It might take place in a month. We don't know. And of course, tomorrow on tariff news or something else that comes on, World War III breaks out, the market just rolls right over and goes right back down. We can't tell the market what to do. It will tell us what to do. We just have to react. But your most reasonable place to at least take some profit off the table is 610 because that's the line in the sand. However, I wouldn't take the full thing off because pretty good chance right here that you're going to get through that level and then you've got some upside. Studies show, all studies and technical analysis show that your most profitable way of managing a trade that is in breakout mode is not to look at setting a target. Rather, it is to look at raising your stop and trail it from below and keep protecting profits higher and higher as long as it starts moving in your direction. This is trend following 101, right? Trend following is a form of trend trading, which is what we do. We trade with the trend as much as we can. Every now and then, you can throw in a counter trend or a mean reversion or a recovery play of some kind, which is in a downtrend, but you have a good reason to believe it's going to go back up again. But for the most part, we trade the trend, and your most profitable strategy is not to set a target price if you're in breakout, but rather to move your stop loss higher until the stop takes you out of the trade. There are folks, I don't normally do this, but there are folks that use Fibonacci extensions or predictive prices, right? You can use Fibonacci on the retrace on the pullbacks, but you can also use Fibonacci to extend higher off into the right edge of the trade so that you can say, well, if I can go to a 38 level or a 50 level or a 68 level, and at those levels, I can start to take off some profits. So that's another thing you can do. I don't do that myself. In a market, let's see if QQQ would be helpful here. This actually would, I think. So let's get rid of that line there. We'll come back to that because we're going to look at, I have a bunch of new stocks in my greens list that I'm interested in. All right, so let's say you're in this trade and you want to know where to put your stop loss. Here's your most recent pivot low, just like on the S&P. Here's another one. This one is actually not quite as far as the S&P pivot low, so it's a little closer to current price. If you wanted to stay in the trade a little longer, you could use that one right there. You can put your stop loss below the LRC. Again, a little too close to the 50 period to use it, too far away from the 200 to use it, so those aren't really playable. But those would be where you'd put your stop loss. As far as a target price goes, your most recent pivot high, well, I should say there is one right here, and there's another one very close to it right there. But considering current price is not that far away, right? 530 is about where those are, 531, 532, and we're already at 524. I would set my target price up here at 540, which is the all-time high pivot high. Another thing you can do, however, if you want to be in that trade a lot longer, is you take a look at the RTL, right? The STL, the supporting trend line, is that which is underneath the pivot lows. That's your STL. The RTL is the one that you put up on top of those pivot highs. That line, which of course will extend out at an angle, becomes your target price. That's your target price. Now, with a linear regression channel, the way I've set it up, you can also use the blue zone up here as a target price. And as the further out you get, the higher that blue zone is going to go. Same with the RTL. I have to say, using an RTL as your target price is a fairly low probability trade because most often it doesn't get all the way back up there. But the blue zone is actually a pretty good place to put your target price. So as the trade matures, you would put your target price initially up here at 545, and then a week later you'd move it up to like 550, and a week later 555, etc. You see how that works. Just keep it in the middle of that blue zone going forward, and you should be okay. Of course, you also want to raise your stop losses. You always want to keep reducing risk. Keep reducing risk. That's much more important, reducing risk, uh, than extending your profit target. Okay, that's all I wanted to say about that. Let's take a look at. So we did SPY already. Let's take a look at QQQ. I want to get rid of these lines, and the main line that I'm watching right now is this one right here. It's a nice little um, downsloping uh, line, which coincides quite nicely with an upsloping line. But in other words, what we're getting is what I call an apex setup, where the price range, it's not getting broader, it's getting narrower, tighter. And the further out we get into that apex, right? The apex is way out here. The further we get out into this little triangular zone here, the more likely we are, the closer we are to getting a real breakout to the upside. How do we know it's going to break out to the upside? Because the expectation is that it will break out in the direction of the prevailing trend. The prevailing trend is up. The breakout should be to the upside. So I really like this setup. We're already long QQQ. We got long early this morning, and I think we're pretty good in a pretty good place to see this carry on. Now we've got that, right around 530. We've got some resistance, and if it gets through that, 540 is our next target. We'll have to watch this closely when it gets up to near those pivot highs, if it does. It could, of course, roll right back down on news, on bad fundamentals. We've got jobs data coming out. We've got big earnings coming out tonight. Jobs data coming out on Friday. It is the 4th of February today. It's a Tuesday, turnaround Tuesday. So we'll have to watch how market reacts to that data. But all things being equal, this should break out to the upside within a week or so. And when it starts getting up to those levels, we want to make sure that we've got some good volume coming in, some good price momentum going up there, and we don't see any redness. We don't want to see a redness. We don't want to see a close below the open. We don't want to see a reversal bar of any kind when it gets up to near those levels. All right, QQQ looks good. We also went long the small caps this morning. Good time to get in because it's been all upside since then. Now, this is a little more of a problematic trade. This is more, in my opinion, a pattern trade than it is a momentum trade or a trend trade. So let's get rid of all this stuff. Actually, I don't want to get rid of all of it. What happened there? Actually, I'm not going to get rid of any of it. Let's just zoom in. Okay, so this line right here, this 226, 227, pretty thick volume shelf. There's been a lot of shares traded hands, both up and down at that level. When you come into that level from below, it tends to act as resistance. When you come into it from above, it tends to act as support. Very key level, and we're right there today. We are right there. Now, what I really like about this, we recovered completely from the tariff gap down, which tariffs are going to hurt small caps much more than the big blue chip stocks. We recovered completely from it. We closed the gap. We were above the 21 EMA. Where's the 50? 50 is still ahead, and that's going to be the next level, around 230. We get through 227, we should go all the way to 230 quickly, and then all bets are off. But if it breaks out as it is doing today, where does this really go? Right there. This is the RTL. This is the downsloping line that has been capping price movement on the downtrend or the pullback. It is in a slight uptrend. You can see that from the slope of the 200. 21 now is starting to move back higher, but really the LRC is what gives us the slight uptrend, the very modest uptrend that we're in. So we should expect a breakout to the upside of this long-term pullback. Small caps have been a lagging sector, nowhere near the all-time highs. Not even this. That's not all-time highs. We're still well below all-time highs. But we are doing really well today. We're near breaking out, and we had very good volume yesterday on the flash crash on the tariffs. And if we can just get back up above 227, it's called 227.50. We get back up above that. Might happen today, probably happen tomorrow. Then it's 230, probably stall there for a few days. We get through that, all bets are off. It's 235, 240, 245 from there. I like it, but here's what I think is really going on with this chart, and that is that here you have a left shoulder, here you have a head, and here you have a right shoulder. It's not perfectly formed, not by any means, but the inverted head and shoulders, which is what this is a bottoming pattern. It can happen at the top of an uptrend. That's a continuation pattern. Here it's a bottoming pattern, and it is one of the most robust patterns in all of charting, right? It is, there aren't too many, actually, aren't too many patterns that are worth looking at. This is one of them. And the fact that we are right up against the neckline and ready to break out is very encouraging to me that the small caps may be back on track. And frankly, they should be. If rates are coming down, if the dollar is weak, if the tax brackets are coming down, if regulations are coming down, all of those are big tailwinds. Where are my thumbs? Big tailwinds for small caps. Small caps should start to outperform. In fact, I've had them in my thesis. They are or should be outperforming quarter one relative to the big mags. So far, that hasn't been happening, but we'll see. We're just into quarter one. We're just a month into quarter one. My thesis trades, which I don't put a whole lot of stock into because, as I say in the room a lot, we trade day to day. We let the market tell us what it's doing, and then we just go with that. But thesis trades are always interesting. They're kind of fun to develop anyway. I tend to be right, but not at the right time. So, I'll say, oh, the quarter one is going to be weak. Well, it's probably going to be weak, but not until quarter two. Energy plays are going to come back. Well, they came back last week, and I thought they were going to come back next week, that kind of thing. So anyway, it just is what it is. Inverted head and shoulders. Now, the pattern for inverted head and shoulders is you take the depth of the head, which is like 214, on up to the neckline, 226. That's a 12-point spread. Add 12 to, let's say, call it 227, is going to be 239, close to 240. That gets us almost back up to 52-week highs. That's on that pattern. We're not there yet because we need to get back up above that yellow box there. Once we're back up above that, it is a confirmed pattern, and we can start to think about 240 as our exit. Okay, let me just go over, I'm not going to do the mags. I'm going to go over Green's list. I have a few mags on here. And then I'll take a few chart requests. I'm going a little bit overboard here on my explanation, so I don't want to take up too much time. Although we're doing really well. We're up really nicely today with a nice big fat profit loss going for us. And we're also up at all-time highs for the room, which is always a good thing, especially when the market is not at all-time highs. If the market's below all-time highs and we're at new room all-time highs, we're doing something right. Okay, so I have a few China names on here. This is one of them. China's been in play, in focus, because of Trump and President Xi and tariffs. And I don't think the market yet knows what's going on with this. I suspect that if the tariffs, like they were for Mexico and Canada, are pushed back, and you know, then then China should really go higher. And I don't think we're there yet because I'm looking at telecom and it's not Trip. I'm sorry, Trip.com. This is like the booking travel booking play for China. But I like this pattern, right? Uptrend. You've got the stacked MAs. You've got banging up on the door of, I don't know if that's all time highs, but it is certainly 52-week highs, and a nice sort of rounded bottom heading into that with a coil right here or a flag forming right here. Very, very good stuff. Uh, it's not doing much today, but I think it's worth watching. So oil, we were long oil. We got stopped. Did we get stopped out? Or did I take us? No, I think we got stopped out. I think we got stopped out yesterday. Yeah, we did. We got stopped out yesterday. Okay, so and good thing we did because it gapped way down. Now look at this open. Tag the 50 period moving average, and it's been all upside from there. This is a bullish move. It's not a bearish move, it's a bullish move. We probably should get back into oil. My thing is, for about a year now, I've not been trading either energy plays or oil very well. Natural gas, I'll throw that into the mix. Quite a few stop outs. For whatever reason, I'm just out of sync with the energy market. So I've tried to avoid it as much as possible. It's just that we had this really nice looking setup here. It was at the LRC midline, just below the 21, above the 50. We had this nice, perfectly formed buy signal on an indicator that I'm kind of playing around with. I'm not sure it's all that reliable, but you've got the green background uptrend. You've got the green bar buy signal. You've got the fresh buy signal on the stochastics at a deep oversold level. Everything looked perfect. And then I just had the stop, I guess, a little too tight. But even if I didn't, we would have been stopped out this morning on that big gap down. Now, it turns out that oil is a big part of the tariff talk because we get so much of our oil from Canada, and there, if there's tariffs on oil, it's going to raise the price, and then the demand comes down. When demand comes down, oil price goes down. So it's all about tariffs. So anyway, but it is on my greens list. We probably should be back in it again, but I'm a little gun shy after getting stomped out. ISRG is on the IBD leaderboard. It was a very good earnings report. The market, for whatever reason, decided to take profits. Banked down into the 21 period moving average. We're now several days away from earnings. This is typically a place where if that was a bad report, the market would start to punish the stock, and it hasn't been. It's been holding with a lot of good upside, even on those days when the market gapped down quite strongly. It did not do that. Holding at 21, everything's rising. Stacked MAs, upside LRC, good volume balance going on down here. Fresh stochastic buy signal. This is a good stock to buy, and the fundamentals are phenomenal. CRM, nice little breakout of the pullback line. Got up to really good strong momentum on heavy volume, and then a little bit of a pullback down into the pink zone again. Yesterday would have been the perfect day to buy. We're long some calls in my options room in this one. And it was a little bit of a gap and crap today. Everything software related is up on Palantir, which reported huge earnings last night. I'm not sure what it is doing today, but it was way up 20% or more earlier today. So all software names are kind of riding the coattails of that. This is a nice looking setup. It's not perfect. We don't have the oversold stochastics. This is a little bit of a problematic chart here because of the gaps down, but you're going to see that all over the place in tech because of the tariffs, because of DeepSeek and all that stuff. Here we have the biotech group, it's been pretty volatile today. Congress is confirming Robert Kennedy, which I think is now a thumbs up. I think he got confirmed all the way through. And the pharmaceutical industry is a little bit leery of him. He might be a little more hawkish than they would like him to be. And so it's been volatile, but I like the chart, and it has been a lagging sector, like crazy lagging sector. So you've got your left hand shoulder, you've got your head, and you've got your right shoulder. This is actually very nicely formed. You've got, it's a downtrending stock. So this is one that you'd have to kind of think, all right, this is a recovery play. All the bad news is priced in. You've got great valuations. We just had Pfizer come out with very good earnings. Merck came out with very good earnings, although I think Merck got a little punished today. But and there was some other news as well on Lilly, I think, that came out earlier this week. So all good stuff. It's not confirming yet. It's got to get up above 93.85, but it looks like it's going to head there. And if it's up on bad news today, what it thinks is bad news with Kennedy, then that's bullish, right? That's very bullish. Tesla is not quite there yet, but it is into a nice tight little wedge. It's a falling wedge. It's an uptrend. It's down in the pink zone. It's a reversal bar today. I like all that's going on here in Tesla. I just need to see a little more volume, bullish volume. It's been a lot of distribution lately, and that's a little scary. We are long Tesla, TSLL. We got long yesterday on the dip. We're up a little bit today, but it's been pretty quiet for the most part. The semiconductors are holding a very strong level of support. It goes way back. That whole area right in there, let's just call it 237. That whole area is very, very strong. Every time it gets down, it bounces right back up, and it goes pretty far, right? 237, 265. That's a big bounce. So keep an eye on this one. We're long NVIDIA already. We're long Avgo already. The only other play we could add on would be SOXL. You've got AMD reporting tonight. That's probably going to move this a little bit. But as far as holding a support, technical analysis 101, this one looks pretty good. And we also had some recent bullish divergence as well. We did QQQ upstart. It bounced out of the pink zone, came right back down into the pink zone on the tariff drop yesterday. Not doing a whole lot today, so it looked stronger earlier today on a follow through of yesterday's reversal bar. This is not yet a buy, but it's one worth keeping an eye on for after earnings. Now, Apple is an interesting one because it had a really good report, gapped way up. I mean, it was up here above 250 overnight, opened up the next day, traveled all the way down, and then got whacked on the tariffs. But big reversal bar today, back into the gap. We haven't closed the gap, but I think that's going to close in the next day or two. We're coming out of the pink zone of an uptrending LRC. It's not the great chart. It's not perfect. There are all kinds of problems here with volume balance and gaps and bearish crosses in the moving averages. But I think the line in the sand is that one right there. If that can break to the upside, you'll see Apple start to make its way back toward market leadership again. Rocket Labs, I have a few shares. We got stopped out yesterday, but I have a few shares of this one. We did get stopped out yesterday, right off the open, unfortunately. But I just have a few shares I'm kind of hanging on to stubbornly. It's down here in the pink zone, a reversal bar yesterday, stacked MAs, nice uptrend. I think this one should be okay. Google reports tonight. I really like the chart. I'm kind of hoping it gets knocked down a little bit, down to around 200. Don't want to see it crack. But if it gets down to around 200, I think we'll probably start selling some premium on this one because this is about as good as it gets. It's not a big momentum stock. It's got fairly rich premium, very liquid weekly options, and we can just sell those puts week after week. We do some protection down below. We sell the puts at the money, and that's my plan. But I have to wait till we get past earnings. QFin is a Chinese asset management firm. Very nice looking chart, stacked MAs, nearing all-time highs. ARK is up nearing all-time highs. It looks a lot like the S&P 500 right here. It's, of course, filled with all kinds of growth names and software and Tesla. It's mostly a big play on Tesla. What I like about this is about as bullish as it gets when you start coiling underneath all-time highs. And I don't think that those aren't all-time highs, by the way, but 52-week highs at least. When you see a rounded bottom coil without getting through the upside, but a lot of knocking on that door, breakout is imminent. I think we probably should be in ARK before the end of the day. Silver, kind of similar pattern, although it's down at the end of a pullback. We are in AGQ. So far, so good. This one I really like a lot. This is an energy play. It's a technology play that services the energy industry. So it's a little bit removed from things that normally affect energy like interest rates. And it's got super strong fundamentals, and it's highly ranked in market surge IBD. So here's your buy signal down here. You've got the stochastics flashing buy signal. You've got the reversal bar yesterday in the uptrending LRC in the pink zone. Pink, buy the pink in an uptrend, sell the blue in a downtrend. And we went long yesterday, and it's been all upside from there. I like this setup a lot. 3-bar reversal, big green stick today. Really good upside here. Momo is a fun little play in China, and I just have it on the list because I do think we need to have something on in China ahead of this time with Z. I don't think this is the best one, but I just have it on my list. It's one of my favorite trading stocks. JD is another one, and this one looks a little bit better, right? It's up near recent highs, below 52-week highs, but it's banging up on the door again. We've got the fresh 21 over the 50, 50's above the 200, slightly uptrending LRC. This chart looks healthier. YMM is probably one of the strongest charts out there in the China space. This is a trucking logistics company, and it's coiling up very strongly. We were actually in this one back in this area here for a while, and we just took some small profits because it wasn't going anywhere. Still not going anywhere, but it has recovered very nicely from yesterday. Alcoa, of course, steel play, tariff related, rate related. Not a great looking chart, but it has had some really interesting call flow, so I threw it on my list. FUTU is another very strong company in China. I'm forgetting what they do. It's a wealth management, asset management, I think. Anyway, I don't remember. But if it can get up above 100, this should see a good squeeze going higher. AI is it's on the Goldman Sachs list of the top 25 stocks to buy for 2025. And it's breaking out today for the first time of that long pullback out of the pink zone on a reversal bar yesterday, which closed on the highs, which is always good, and a gap up and go today. Very good looking trade. Now we're long this one in the live trading room, and we just hopefully we hold on it. We get it above the 21 today and get some follow through tomorrow. All right, let me take a few chart requests. I don't want to cut anybody off, but okay, let me do these real quick. Let's see if I can do these in Jim Cramer style without without telling you, buy it, and then it goes down, which is what he tends to do. All right, ASTS. So this is a very messy chart action. Every time it gets up, it gets whacked right down to the bottom. It is downtrending. The lows are getting lower. The highs are getting lower. This is not a good. I wouldn't be buying this one. I think Rocket Lab in the same space is a much better chart. So steel is similar to Alcoa, another metals play. This is a steel play, of course. And let's see if we draw in. Yeah, that's not bad. Now, it's kind of hard to tell whether this is in an uptrend or a downtrend, and it is, in fact, in a slight downtrend. You've got the 21 below both the 50 and the 200, and the LRC just very, very modestly tilted to the right, which means that the expectation for a breakout would be to the downside. And yeah, so I don't know. I wouldn't buy it. There are better steel plays out there. And Nucor, of course, is your biggie. What was the other one I was looking at the other day? Well, there's X. That one right there. Still not that great of an uptrend, not even an uptrend, but you do have a fresh 21 over the 50. You've got a nice looking coil right here underneath the 200. See how important that 200 is. It's not getting up above, but it's not falling off either. So it's a nice tight coil. Starting to get a little looser today, so that's good. You've got oversold stochastics, that's good. So I would prefer X over STLD. Texas Roadhouse, one of my favorite restaurants. As someone who only eats meat, meat and eggs. All right, so there's some good stuff going on here. It's not a perfect chart, but there are very few perfect charts out there anyway, and there never are a whole lot of perfect charts at any time. But here's some good stuff. So we've got the uptrending LRC. You've got the 21 starting to curl higher. 200 long-term averages up. I know this one too from the IBD top 50 list. It's often in there. I'm not sure it's in there now, but it's often in there for good growth numbers. Volume balance recently very good. You're banging up on a 1 month or maybe a 5-week tight base. This is a bullish base. So you have a high tight base, and then you have a what I call a bullish base, which is on a pullback. Comes down to the level of support, goes sideways for at least a month. 3 months is really, really good. You don't usually find bases that long, but somewhere between a month and 3 months. And then you would expect it to reverse to trend, which is to the upside. And kind of what it's doing now. It was up higher earlier today, backed off a little bit. But I like this. I like this as a pullback play. You would put your stop underneath the lower edge, and your target would be up here. You know, it's got earnings, but your target is up here at the 52-week highs. That's pretty good. Pretty good spotting there. So Microsoft, which we didn't do, we are long Microsoft already. This is a hold of support play. It's pretty much all we're looking here for it to do. Slight uptrend, but it's got a lot of overhead. It's not going to get too crazy without some really good news going on. And we just had some more antitrust litigation coming out against it and some others. But it's holding the pink zone. It is a slight uptrend, and you can see that this area down here, right around 410, between 405 and 410, there's a lot of hold of support that then bounces quite nicely higher. Doesn't go up in a straight line usually, but who knows? Who knows? So we're long this one. It hasn't been really doing much for us yet, but we're still in. We're going to hold for as long as the market will let us. Wells Fargo. So I did hear about banks that they're doing pretty well today. And yeah, this is a new 52-week high, maybe all-time high. And I also like the fact that on earnings, it gapped up and it has held that gap. So if it gaps up on earnings to new 52-week highs and doesn't come down and close that gap or even get into that gap, that's a power gap, and that's usually a very bullish setup. It's not the most exciting trade because when you gap up to 52-week highs, it tends to just go sideways for a while to consolidate that big change in price, change in valuation. But this looks good. It gapped up on earnings, not to 52-week highs, but that gave it some uptrending room. And now here we are. I assume this is all-time highs, at least 52-week highs. This is, if you like to trade breakouts, this is a perfect one. I shouldn't say perfect, but it's a very good one. You've got good volume balance. You've got oversold stochastics. It's a good place to get in as a new trade. If you're already long, it's a hold. You would put your stop below yesterday's low. Facebook. Okay, so it's a hold. It's not a buy. You're up too high, up above the LRC. Only 95%. I mean, only 5% of all trading takes place up there, which typically means it doesn't stay up there very long. I would expect to pull back on this pretty quickly, but it's got great momentum. It is one of the only mags hitting new all-time highs. Google is also there. Netflix might also be there, but all the rest of the mags are having a bit of trouble. This one is not. So you've got AI, you've got a new platform, and you've got some recent tailwinds politically, we could say, for Facebook. So I like it as a hold, but I wouldn't be a buyer up here. I would wait for a pullback. It's not a sell, though. It's definitely not a sell or a short. All right, Wix is from the IBD leaderboard. I don't know if it's still there, but it was there for a long time. We were in and out of Wix a couple of times, and it's doing well. So it did get gapped down yesterday on the news, but everything else did as well. Hit the 50, rallied back up. No follow through today on a good, on a pretty good bullish day. That's a concern. So you have to be careful if you're already long. It's not a buy until that reverses back up. Anytime you get a gap like that that doesn't close right away, it's a problem because that will tend to act as resistance, right? So that little pocket right there, it's going to be a little difficult getting back up on top of that. And so I wouldn't be a buyer today. But if you do get like a hammer candle and very good volume, if you get something like that looks like this candlestick right here, or a gap up that continues to go, that might be your buy signal right there. Okay, let me do two more. USFD, so okay, all right. Yeah, this is not an exciting stock, but it is a very nice looking bullish chart, uptrending chart, 21 above the 50, 50 above the 200, uptrending LRC. We're at the midline. Your target price initially is 72.50. We're already at 71.75. But it looks to me like with volume balance and some good price momentum heading in to that 52-week high, that you're very likely to get through it. It might not get through on the first try. It might have to chop around for a week or so. And you've got earnings coming up. I don't know if that's going to be, I mean, the last earnings was good. The prior one was not. So be a little careful around earnings. But it looks good. Yeah, it looks good. It's certainly a hold. It's definitely a hold. And if you know the fundamentals, know the company well, and you think it's got some very good growth prospects, then I would say, yeah, get in now and hang on for a few months, because that's a nice looking chart. That trend is not going to go away overnight. So even if it does get knocked back a bit on earnings, or if it gets knocked back at resistance, probably not going to stay down very long. Let me do one more. RKK. So this one was brought to the room yesterday, and I liked it so much I put it on my greens list. I don't know where it is now, but it's down here at the bottom. And I also I'm not sure we got our entry price today, but I was trying to get my trend trade letter members in this one. But it is good. It just you've got the uptrend, you've got the 50 and the 200 are both rising. Yeah, near-term pullback has caused the 21 to go below, but that's not a deal killer. You had a reversal bar yesterday on good volume and a follow-through today. So all of that is just bullish, 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 bullish. You're still really low coming out of the pink zone of the LRC. Your target would be up here in the blue zone, at least up here around 14, which is where those pivot highs are. And you're still under 10. So that's a big 43% move from current price. Yeah, I like it. I like it a lot. It's a buy. It's a hold. And don't take those profits. Just keep moving your stop up. Put your stop underneath yesterday's low and then just keep trailing it higher. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I'll see you back in the main room in just a little bit. Bye for now.